89%?
Listen, I mined Bitcoin full block solo with no pool, 50 Bitcoin block rewards on my computer alone when it was 50 cents. It went up 5 million X, 5 million times, 5 million fold, 500 million
if it keeps
percent.
doing that in the same time periods, it'll be worth more than not only the Earth, but all the planetary system. And I think at some point that'll be unsustainable. Do you agree with that?
I think
that
that's
at some point, exponential growth like that will be unsustainable.
Unless you're looking at the dollar price chart and the dollar is worth very little.
I don't care about the dollar. The dollar doesn't make a difference either. The real economy does, and you can measure that in anything you want. Okay. So, gold is not the best measure.
The gold sucks. Like gold is down lower now than it was 10 years ago.
Bitcoin's not the best measure either because it's an exponential going early stage thing that's the most volatile single asset on the earth. You measure anything against that, you got to be crazy. I'm a big fan of gold, Bitcoin, and blockchain. It's just early stage.
So let's look at it. Let's look at it differently. So let's say that all of this is just a fake Rube Goldberg machine. All of finance.
Totally fake. The financial assets part. Hey, let's step back, Richard. Our productive capacity, the cars we're producing, the computers, the software, none of this is fake, okay? Some of it's been leveraged more than it should, which means we got overcapacity. But it's the financial assets that are fake, like women that go in and get operations, okay?
Yeah,
that's what's fake. All we have to do is take out this financial asset bubble that's everybody in love with because it's given them something for nothing for the last 20 years and made everybody more wealthy, even Homer Simpson a bit. Nobody wants to give up the very thing that is in the way of the next generation having a standard of living and growing like the baby boom.
So what I'm saying is that you have two options available to you. You can complain as loudly as you can that the powers that be are making decisions that cause misinvestment and malinvestment by artificially low credit. Yeah. And I agree with you, and I don't think they give a shit. Or you can realize, they don't give a shit. And so how can I just take advantage of the system, which is unfair? It makes a poor poor, it makes a rich richer. How can I take advantage of that system? And I think that being long in general annihilates being short. And so
we're going to take a bet right now, and we're going to both come together at the end of 2022 and decide who's right. We're going to make a bet right now. I bet this financial asset bubble is going to burst, and if you buy anything, stocks, junk bonds, real estate, anything, you're going to be down in the next 2 years, and you're saying you can't go wrong. You're going to be up. Let's make that bet.
Let's pick an asset, and let's pick a price chart and
pick stocks. Pick the NASDAQ.
So
how about that? This piece about 14,000.
Can we do the S&P 500 like the SPY?
Okay, 39.50 recent peak. What do you say it's going to be 2 years from now?
Well,
the end of 2022.
My side of the bet should be easier because you're saying 80-90% drop, right?
Yeah.
So I'll just say where it is now or higher.
Well, that's pretty sheepish for saying you can't go wrong being long. You should be long. Why would you be long if you're going to earn nothing? Why not be in cash if you're going to earn nothing? And be safe. You have no risk.
You're claiming 80-90% drop.
You're not an investment manager. I can tell from dog.
You understand that saying it's going to be the same place in 1 year is actually bearish, right? It usually is up much higher.
That's what I'm saying, that you're saying long's the place to be. If I thought it's going to be the same place in 1 year and knowing how highly overvalued it is, I'd rather be in cash knowing that's going to be closer to the same place in 1 year. Not knowing stocks is just a guess.
Well, I mean, look, we can edit the bet however you want. My thesis is basically this. It's very easy to point out that finance is fucked up. It's very easy to point out that bad decisions are being made. It's very easy to point out that negative interest rates are insane. It's very easy to point out how fucked up everything is. And that's great. Everything's fucked up. We know everything's fucked up. Okay, now how do we personally profit on that? And that's a little bit harder because if you go short, you will get fucking annihilated. You will get wicked out. The market will stay irrational longer than you can stay solvent.
If you go long over the next 2 years, your chances are 10 times more being annihilated than being short. I'm not telling most people, I'm not telling people to short the stock market, okay?
Okay.
Because that's beyond most people's risk tolerance. And down markets are more volatile than up markets and faster, okay? Most people aren't good at drawing fast gunslingers, okay? I'm saying buy a 30-year treasury bond, lock in these 2% plus rates before they go to near zero in the next few years in a deflationary crash. They went from 4% down to 2% in the 30s. In that crash, they're going to go from 2% down to near zero. In this one, you can make 40% on that 30-year treasury bond in something that's going to pay you that interest and be considered safe.
Did you say you could make 40% on it?
No matter what.
You could make 40% on it, you say? I don't know how T-bills trade. I always thought T-bills were like...
It's not T-bills, it's a 30-year. The longer you lock in a rate... See, bonds, long-term bonds go up when rates fall. It's the opposite. You know, people don't... You always have to explain that to people.
Okay.
A bond, you buy a 2% bond, and then other bonds go down to near zero. Oh, your 2% bond looks like, oh my God, let me have that, baby. I'll pay you double the price. That's what happens.
Okay. Yeah, I mean, I know that if the dollar goes down in value, in general, I would prefer to be tied to things that aren't going down in value, but you found an instrument which... And
give me your rationale. Why is the dollar going to go down? Do you know that in the 2008 crash, when everything fell apart, you know what one currency in the world in the developed countries went up? Do you know?
In 2008?
The dollar, because it's not a great currency. It's the best house in a bad neighborhood.
Yeah, sure.
Europe has printed way more money than us. Japan, way, way more money than them. Our demographics, even though slowing over time, are stronger than either of them, and Japan's the weakness. And China is the worst over-investor, waster of money in the entire world today. We're the best house in a bad neighborhood. If I had to own one currency, it'd be the U.S. dollar and maybe some New Zealand and Sweden and Australia. Would not be Europe or Japan or China. Where are you going to go if you don't want to be in the U.S. dollar?
So it's hard for me to understand your investment thesis. So I'll try and clarify it so I get it better.
Because the currencies do not have a value. They trade relative to each other. I just gave you my thesis. We're the best house in a bad neighborhood.
Right. But so
everybody's in trouble. Everybody's over in debt. Everybody's overstimulated, which always ends up in a crash. We're the best house out of those.
Do you think interest rates should be higher?
Go down. Our stocks are going to go down, and our real estate.
Do you think they should quit printing as much money as they are?
Yeah, as soon as they do, bam, this thing will be over. You know what they did? They just did a little, and we had the repo crisis overnight. Not enough money for banks. Oh yeah, we're fine. We're over this crisis. No, as soon as they stopped the monetary hose to keep this bubble going, it caves. They know they can't, Richard. That's why they won't. They tried it in 2017, 18, and they got their ass kicked.
Well, I mean,
and then COVID came. So
in theory,
they should stop. It's just going to cut off the bubble sooner and make it less, but they're not going to stop. They cannot stop. They're going to have to go till this blows. I think it's blowing potentially right now.
So let me see if I get your playbook right. You think that at some point they can't lower interest rates anymore, and then they can't increase M2 anymore, and then they can't push all the asset prices higher, so then it tastes blood in the water. Then the markets crash.
Right.
Because the markets are crashing, what that means is that people are selling stock for dollars, and then dollars become rare, and then the dollar goes up in value, similar to how it did in the 2008 and 2009 crash. And when the dollar becomes stronger, it actually pushes the value of anything denominated in the dollar down, such as gold or crypto or anything else.